Hi, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 1st of August. All right, now, good trending markets at the moment. We've just come into the start of the Asian session, and you'd be sort of happy to see. I mean, if you've missed the Fed announcement or you've missed any news about this, they have given the markets pretty much clarity around their plan. This is a one-off cut. This is not the start of a cutting cycle, and basically come back to the data now. With the overall perception of that, the meeting is, the overall outcome, as I've got here, is a hawkish Fed outlook. You know what? It's not exactly hawkish because they're not about talking about raising rates, but it's hawkish in relation to what the market was expecting. They were expecting we're cut now, and we're going to cut a couple of more times this year. Now, that is completely off the table. I think the chance of another couple of rate cuts is down to about 5%, or 5 or 10%. And so that's off the table. Now, that's given the US dollar, very, very clear direction for the moment. And you can see this reflected in the analysis sort of area here. The US dollar index now, the central bank sentiment to me, as I said, I've called it hawkish, but it's probably more neutral, coming back to the economic numbers. And this is where the Friday's non-farm payrolls are going to be huge, because if they're strong, the dollar will really go ballistic and shoot through the roof. Dollar index is breaking all time frames on the charts. And if it just draw a line in the middle here, you can see all the dollar pairs going up. Now, the dollar yen, dollar CAD, and dollar Swiss haven't really broken the weekly trend lines yet, but this sentiment is very clear, and it is starting to move forward, as is the bottom section here. Euro looks like the weakest other pair against the US dollar. Sterling, of course, got Brexit pushing it down, as well as a bit of a strong dollar. And same with the Aussie dollar there as well. Except, you know what, the Aussie dollar, the overall sentiment here may wane from the central bank, because inflation figures yesterday out of Australia were a little bit stronger, takes off the fundamental drivers. So that'll probably be updated to sort of sideways as we go forward. And the Kiwi, well, it hasn't broken down through all time frames yet, but it's probably only a matter of time. So what we've got is really good, clear markets. Upcoming events, just keep an eye on the data that's coming out today, of course. We've got some more Chinese manufacturing numbers. As I said, like with the way these currencies are moving at the moment, particularly the two pairs impacted by China, weak numbers works very nicely with that scenario. In fact, all the data. If we get weak manufacturing numbers in the UK, it should just drift lower. The Bank of England rate and statement is going to be the key sort of event, as will be the follow-up speech by Governor Carney. Now, this Brexit issue is causing a huge amount of problems as far as people trying to plan events. Imagine the central bank trying to plan to manage the economy around a no Brexit deal. So there may be a huge amount of caution there, and that could send sterling down even further. One of the key things you want to be looking at closely is the first number straight after the Fed is the ISM manufacturing. Now, if this number is strong or as expected, it adds weight to what the Fed was saying yesterday. And we could see a bit of a surge in the dollar ahead of the non-farm payrolls Friday. But don't forget, this is going to be the major event. What you're trying to do now is just piece together. We've got clear sentiment across the board. Let's just see if any of these numbers that are coming out are going to upset the rhythm of those currencies. Now, if you come across, look at the charts just quickly. We'll get my pen up. You can see the levels to be getting short at, right? So like Aussie's going down, Kiwi's going down. We've got resistance levels. You have to try and work out where the currency can potentially bounce back to get into the trade at a good level. That's what it's all about. Dollar yen's already sort of flown the coop. It's already up probably a little bit too high, but looking to get long back towards 108.80 makes sense. Euro, this is a really nice price action I like to see. It's broken down after the Fed. It's sort of consolidated there. Looked like it might sort of retrace back to 111. It's done the work, and now it's drifting lower. This is really nice. You've got to feel very comfortable with getting short euro. If you're short around 80, well, you've got a great entry level. Chasing it from this point may be difficult, but you know what? All signs point to a lower euro. Sterling, well, it's going lower. As I've already mentioned, Brexit, a major issue there, and it could change around at any stage. One of the trickier trades yesterday was the dollar CAD. Now, we had stronger CAD numbers. okay, pushed dollar CAD down. I mean, stronger CAD GDP numbers. And then obviously that turned around with the US numbers. There was also some PPI numbers, I think it was, out of Canada, which were really weak, confused the picture. But strong dollar is the way of it at the moment. And dollar CAD, not making it easy, but it's following the dollar trend there as well. So that's all we've got to follow at this point. There's no need to go chasing the markets. The writing's on the wall. We have been waiting for this opportunity to come out to give us clarity. I think the Fed have done a great job in cutting rates, diffusing the potential impact of dovish sentiment, and now it's back to business as usual. And what we've got is clear markets for the time being, and you need to start to look to take advantage of these opportunities. Find the pairs that have good entry levels. To me, the dollar Swiss and euro look like the two best pairs. Dollar Swiss hasn't rallied enough yet, so I think it's got more room to go, probably more so than euro just at the moment. Brexit, it's a bit of a thing. Just keep in the back of your mind, if you are getting short sterling, Brexit could come back and come back and impact things. It will only happen probably during the UK session. So if you're short now, you've probably got a good 5 or 6 hours, 6 hours before anything comes out of the newswise. And the two bottom pairs, well, you know what? We've got a bit of a lead in here with the Chinese numbers. Any weak data should give traders confidence to get short Aussie and Kiwi. All right, guys, that's it from me. Pretty good outcome from the Fed. Now let's take advantage of it and see these things follow through. All right, guys, have a good one. Cheerio.